Most people are staring at the silver charts right now, dreaming of that triple-digit $100 mark simply because of inflation. But they are wrong, dead wrong. While Wall Street is obsessed with M2 money supply figures and the debasement of the dollar, a much fiercer, silent war is unfolding deep within global AI data centers and our crumbling electrical grids. Silver is no longer just the poor man's gold. It is rapidly becoming the physical backbone of the artificial intelligence revolution. Are we facing a mere financial rally or a physical supply crisis, the likes of which we have never seen before? Think about it. We've spent the last decade talking about silver as a hedge against the Fed. But look around. Every high-end semiconductor, every massive electrical transformer, and every solar array powering the AI cloud requires silver. It's the most conductive element on Earth, and it's non-negotiable for the future of tech. In today's video, we aren't just looking at price targets. We are going beyond the M2 charts and the typical inflation hedge narrative. We're decoding why the $83 breakout level is just the starting gun for a structural shift in the global economy. We're moving from the era of paper assets to the era of resource scarcity. If you've been holding silver waiting for a currency collapse, you might be missing the real story. To understand why silver is about to decouple from every other asset class, we first need to stop looking at it as money and start looking at it as an industrial miracle. To truly understand why that $83 mark is just the starting line, we need to stop looking at silver as a mere currency and start viewing it as an irreplaceable electronic component. For decades, the narrative has been, buy silver because the Fed is printing money. And while that's true, it's only half the story. In 2026, the game is changed. Inflation is the excuse, but physical demand is the engine. Let's look at the hard data. According to the latest figures from the Silver Institute, we are currently witnessing a structural deficit that would make any commodity trader sweat. We aren't just talking about a slight dip in inventory. We are talking about a multi-year gap where the silver being pulled out of the ground is nowhere near the amount being consumed by industry. Why is this happening? Because silver possesses a superpower that no other metal on the periodic table can match. It has the highest electrical and thermal conductivity of any element, period. You can't build a high-efficiency future without it. In an era where every major nation is racing to digitize their entire infrastructure, silver has moved from the jewelry box to the center of the global supply chain. Many investors get spooked when they see M2 money supply fluctuate or when the mainstream media shouts about cooling inflation. They think if inflation slows down, silver must drop, right? Wrong. That is the old playbook. When you look at the physical market, you see a hard floor. This isn't a floor made of paper or sentiment. It's a floor made of industrial necessity. If a tech giant needs silver for its next generation of semiconductors, they don't care if the CPI report was 0.1% lower than expected. They need the atoms. They need the metal to keep their assembly lines moving. This physical scarcity acts as a massive shield, protecting silver investors from the typical volatility of the broader financial markets. We've seen gold hit record highs, but silver is the one with the dual engine. It has the monetary appeal of gold, but with a massive, hungry industrial beast backing it up. While paper silver traded on the COMEX can be manipulated or suppressed by big banks, you cannot print a physical ounce of silver. The mines in Mexico and Peru are struggling to keep up with grade depletion, and recycling isn't filling the gap fast enough. So when you see price action around the $80 range, don't just ask about the dollar's strength. Ask yourself how many ounces are actually available for delivery. Because right now, the answer is not enough. We are entering a phase where the utility value of silver is finally catching up to its monetary value.
And when those two forces collide, that's when you get the kind of vertical moves that rewrite history books. But as significant as this supply-demand gap is, it's only the foundation. The real explosion isn't coming from traditional electronics. It's coming from the one thing that has consumed the world's attention over the last 2 years. I'm talking about the massive power hunger of artificial intelligence. But here's the twist. You can print $1 trillion to fund an AI project, but you cannot use magic to manifest the silver required for the hardware. And that brings us to the most critical bottleneck in the modern economy, the power grid. We've established that silver is the foundation of modern industry, but now we need to talk about the elephant in the room, the one force that is fundamentally breaking the supply-demand equation: artificial intelligence. Every time you ask a chatbot a question or a developer trains a new large language model, a physical chain reaction occurs.
It starts in a massive data center, a cathedral of silicon and heat. These centers are packed with thousands of H100s or the latest Blackwell chips. And here is the secret the mainstream media rarely mentions. You cannot build these high-performance AI chips without silver. Silver paste is the key to the multi-layered ceramic capacitors and the conductive pathways that allow these processors to operate at lightning speeds without melting down. But the thirst for silver doesn't stop at the chip level. AI is an energy vampire. A single ChatGPT query consumes 10 times more electricity than a Google search. To keep these AI brains alive, we are seeing a massive, desperate expansion of the electrical grid and renewable energy infrastructure. Think about the transformer bottleneck, not the movie, but the actual electrical transformers required to step down high-voltage power for data centers. These devices are packed with conductive materials. Think about the thousands of miles of new transmission lines. Think about the solar farms being built at a record pace to meet net zero mandates while powering the AI cloud. Silver is the primary ingredient in the metallization paste of solar cells. There is no green AI revolution without millions of ounces of silver. This brings us to a concept that should terrify you if you're holding cash: fiscal dominance. Governments realize that the race for AI supremacy is the new space race. If your country falls behind in AI, you fall behind in military, medicine, and economy. So what are they doing? They are spending money they don't have. We are seeing trillions of dollars in dark subsidies and infrastructure bills being passed to harden the grid and subsidize chip plants. This is the definition of fiscal dominance, where the government's need to spend and manage its massive debt forces the central bank to keep the money printers running, regardless of what the official inflation targets are. They are printing paper to build physical things. But here is the ultimate twist, the kicker that most people miss. You can print $1 trillion. You can authorize a $10 trillion AI Infrastructure Act with the stroke of a pen. You can create digits on a screen until the sun goes down. But you cannot use magic to manifest a single extra gram of silver from the ground in Ontario, Mexico, or Peru. The earth doesn't care about your stimulus checks. The physics of mining don't care about fiscal dominance. It takes 10 to 15 years to bring a new silver mine from discovery to production. We are living through the result of a decade of underinvestment in the messy business of digging holes in the ground. We are moving into a world where digital wealth is about to collide with physical reality. For years, we thought the cloud was something ethereal, something made of light and air. It's not. The cloud is made of copper, silicon, and most importantly, silver. When the world's most powerful governments and the world's richest tech companies all realize at the same time that they are fighting over a shrinking pile of physical atoms, the price on the screen becomes secondary. Availability becomes everything. We are looking at a scenario where the bid for silver isn't coming from a retail investor looking to make a quick 20%. The bid is coming from a nation-state that needs to secure its AI future, or a tech titan that needs to ensure its data centers don't go dark. That is a price-inelastic buyer. They will pay whatever it takes because they have no other choice. So, while the charts show silver struggling at $83 or 85 cents, remember that those are paper prices. In the real world, the world of transformers, chips, and grid expansion, the hunger is only growing. But if silver is this critical, why isn't everyone piling in? Why is the mainstream still skeptical? It comes down to a fundamental misunderstanding of how to actually play this trend. Most people are buying the wrong things at the wrong time for the wrong reasons. In the next section, we're going to move from the why to the how. We're going to talk about how to actually position your portfolio to benefit from this hardware supercycle without falling into the traps that catch 90% of retail investors. Because knowing the silver is rare is one thing. Owning the right piece of the infrastructure is where the real wealth is built. So, we've covered the why, the massive physics-driven demand from the AI revolution. Now, let's talk about the how. How do you actually turn this macro thesis into a functional investment strategy? Because knowing a storm is coming is useless unless you've built the right shelter. The first instinct for most people is to rush out and buy every physical silver coin they can find. And don't get me wrong, holding physical metal is the ultimate insurance policy.
It's non-custodial, it has no counterparty risk, and in a world of digital chaos, having something you can hold in your hand is vital. But if you are looking for life-changing leverage on this AI hardware supercycle, you have to look at the infrastructure of the silver market itself. I'm talking about the miners, but not just any miners. In 2026, the era of easy mining is over. We are seeing a massive shift in what institutional investors call jurisdiction risk. It doesn't matter if a company has 100 million ounces of silver in the ground, if that ground is in a country that decides to nationalize its resources or hike royalties to 80% overnight. This is why smart money is rotating heavily into Tier 1 jurisdictions, stable regions like Ontario, Canada. When you look at mining hubs like northwestern Ontario, you aren't just looking at rocks. You're looking at established infrastructure, local expertise, and a legal framework that respects property rights. This is where the AI supply chain starts. If you want to play the silver breakout, you look for companies with high insider ownership and projects that have been time-capsuled. Assets that missed the last few cycles and are now being reopened with modern, systematic drilling methods. Think about the math of a mining stock. If the silver price moves from $80 to $100, that's a 25% move for the metal. But for a miner whose production costs are fixed at $25 an ounce, that same price move can represent a 100% or 200% increase in free cash flow. That is the leverage. That is how you turn a macro trend into a wealth-building event. But there's another signal you need to watch closely, the gold-to-silver ratio. Historically, this ratio has been a speedometer for the precious metals market. When the ratio is high, silver is historically undervalued compared to gold. As the AI revolution demands more physical atoms, we are seeing this ratio begin to compress. Silver is beginning to outperform gold on a percentage basis because the industrial hunger for silver is simply more desperate than the monetary hunger for gold. If you are currently 100% in gold, you might be holding the safety, but you're missing the velocity. The strategy is simple, but it requires discipline. First, secure your base with physical metal. Second, seek leverage through high-quality explorers and producers in stable, pro-mining jurisdictions. And third, stop checking the paper price every 5 minutes. We are no longer in a market driven by daily Fed whispers. We are in a structural hardware supercycle. This isn't a trade, it's a multi-year revaluation of the physical world. Think of it this way. In the 1800s, the people who made the most money weren't always the ones digging for gold. It was the ones who owned the land, the shovels, and the infrastructure. In the 2020s, AI is the new gold rush, and silver is the shovel. It is the mandatory tool that makes the entire digital world possible. The question you need to ask yourself is, do you want to own the paper promises of a digital system that is printing itself into oblivion? Or do you want to own the physical atoms that the digital system needs to survive? Because as the $83 level disappears in the rearview mirror, the window to position yourself in the shovels of the AI era is closing. But before you go out and place your bets, we need to bring this all together. We need to look at the ultimate endgame. What happens when the world finally realizes that we've run out of cheap atoms? What does the reset actually look like for a silver investor? We are standing at a historic crossroads. Two massive tidal waves are colliding right before our eyes: the structural debasement of fiat currency and the explosive, non-negotiable demand of the AI revolution. For decades, silver was pushed into the corner as an alternative or a speculative play. But as we've seen today, the digital world cannot exist without the physical world. The cloud isn't made of air, it is made of atoms, and those atoms are becoming increasingly scarce. When the financial bubbles eventually pop and the paper promises burn away, the people standing on the firm ground of physical infrastructure and strategic hard assets will be the ones left standing. The $83 level is more than just a line on a chart. It's a psychological barrier that, once broken, changes the narrative from if to how high. But remember, in this market, having the right mindset is far more valuable than just having the right entry price. So I want to hear from you. Are you holding silver as a shield against inflation, or are you betting on the unstoppable growth of AI and the global power grid? Is silver still money to you, or is it the most important industrial shovel of the 21st century? Leave your thoughts in the comments below. I read every single one. And do yourself a favor, double-check your portfolio and your strategy today, before that $83 zone becomes ancient history. Thanks for watching, and I'll see you in the next one.